another episode of pre-market analysis, where on a chart of Nifty we try to make informed guesses on where buyers and sellers are. So this is a monthly chart of Nifty, and in this time frame a low was created in April and the next low was created in August. So the one in August is much higher than the one in April. So a higher low means buyers are buying with more confidence at higher levels. So this makes it bullish. And let's try to mark out the important levels. The most important and major level is ATH 26 to 77. I'll mark it in red, expecting sellers to be there, and the support, the logical support is the swing low. Let's mark it in green. It is 24,337. There's another support that's playing out well right now. That is the previous swing high. It is a zone of liquidity. That is 25,900. There's another buyer's area. These two candles, the July candle and the August candle, if you just combine them together and take the bodies of these and take the midpoint of this, that is the mean value of the price action that happened in these 2 months. These 2 months, at least right now, looks like an order block. That is where the smart money takes the market in the opposite direction and keeps it there so that the retailers bet their money on in that particular direction and then hit all their stop losses. So this seems like an order block. This is almost 24,985, so we can round it off to 25,000 because it's the midpoint, it's the mean price of these two, and 25,000 round figure looks like a good price. So this is all in the monthly time frame. Let's go to the weekly time frame. In the weekly time frame, this is a low and this is another low. It's higher lows have been created, so it's bullish, and there is an interesting level here. If you look, this is a gap and there is a swing high in a gap. So swing high in a gap is a very good liquidity zone. I'll just reduce the thickness of it, of this line. So that is 25,450. 25,450 did act as a support, and there was a huge buyback that played out in the last week from this support. Let's see if it sustains. Now going to the daily time frame. In the daily time frame, this is a low, this is the next low, and higher lows have been created. So it is daily time frame is the bias is bullish in the daily time frame. I do not see any interesting levels that I need to mark out here. Go to the 4-hour time frame. The 4-hour time frame, it's interesting. This is a low that has been taken out. So, and no particular and it has not created a lower high, so I cannot call it bearish. I'm just saying it's not sure. Is there an interesting level? Well, there is one here. Again, this is a gap and there's a swing high in a gap. A swing high in a gap is a liquidity zone. As I mentioned earlier, you can see there's good buyback that has happened on the 14th of November, the previous trading session, and this is the liquidity zone that has played, and it is 25,800. Okay, now let's go to the hourly time frame. The hourly time frame too, a low has been taken and a lower high has been formed. Has it been formed? Let's see. No, this is this a high? So this is 25,863.1 and this is 25,864. No, this is not a high. So this is a high and this is 25,940. this is 25 net. So this is a high. So this high and this high, so the latest high is lower than the previous high, so an hourly time frame you can call it bearish. So it's a on the shorter time frames it is sort of a confusing structure. So it is not one of those days where I would take trades. I would prefer to stay out of the market. This kind of biases does not suit my trading style. So I am not a certified advisor. So and all these information given in this video is only for educational purpose. Consult your certified advisor for any kind of trades. Thank you.